We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. The readtheticker.com blog has this posting. SP500 kitchen cycle says trouble brewing. This is dated the October the 12th 2017. What we do is we every now and then we post this chart. So the SP500 with two major cycles in it, the 900 bars and the 300. The 900 bars is the kitchen cycle, and the 300 one was just a third of it. It's the inner workings of the cycle. And here we said, I just clicked it to open it up. Here we said that we were about the last 10% of the market based on the cycle. It's just a a guide to how much to go. So here we're at about 255, add on about 10%, 250. So it's getting close to 29, which is where we are now. So it's not a bad guide. And as you can see in the past, the sine wave, which are fixed cycles, that means they don't adjust with price, shows tops or what's going on quite accurately. So we're expecting a top late 2018 or mid 2018, or even rolling into 2019. And as we can show here, that the cycles up here, this 900 period cycle, price has moved well with it. Now, if price wasn't moving well with the cycle, this adaptive sine wave, or DPO, detrending price oscillator, would not look like a sine wave. It will flatten out or do something funny. Okay, so the nice wave structure you see down here shows that price is conforming with the sine wave. Okay, it's because it's adaptive. Here's a fixed cycle, this is a fixed cycle. So what I want to do is take the cycles here and put this into a sine wave environment for better forecasting. Right, so that's what we're using. We're using the kitchen cycle, the 900 bars and the 300 bars. It's found on the blog. Okay, so let's have a look at this. So what we have here is the same SP500, but it's updated with the most recent price. There's the details up here. We're using the SPY actually. Closes 282, or 2820, 2800 with SP500. So what we have here, we have loaded up these details. I'll put them over here for members who want to mirror this chart. We have the 900 cycle with a low bottom of October the 5th 2009, taking out 50% space in the chart. 300 cycle, the low bottom on the 5th of the 5th, taking out 40% space in the chart. Now what I mean by the space in the chart is that the chart goes from there, the top of the chart, from top of the range to the bottom of the range, and 50% is just halfway and 40% is just 40%, obviously. But that's the weighting of the cycle. So we have the green cycle is the 900. Okay. Green cycle is the 900, and the blue cycle is the 300. As you can see, the bottoms are at different places. Okay, that's because they fit better where they're allocated. The red cycle, the red sine wave, is the two cycles combined. It's the 900 cycle and the 300 cycle combined. Okay. Now what's so spooky about this? Well, let's look at a 2009 sell-off. Now, first of all, before I get into that, I should say that the sine wave's turn points forecast turning action in the price movement. It's not when the sine wave goes up and down, it's not a mirror of the magnitude of the move. It's where the expected some sort of change in trend is going to happen. Okay, so if we get a down wave and sine wave like that, it doesn't mean the price is going to go crashing. It just means looking for a changing in behaviour. Okay. So here, what actually happened was is that we got the top around there in October, I think it was October 2007, and we had a downward pressure, a bounce up, and as you can see, price is mirroring that pretty good, and it goes down to the low. So price is moving thereabouts to where the low is. Now, once again, cycle tops and bottoms aren't exact timings of turning a price. What we're looking for is an arrangement of the sine wave mirroring the price action, and the other way around. So we want to say this is where trouble is going to come in the next 2 or 3 months. This is where trouble is not going to come. Is the cycle and price behaving as well as it should. Is price diverging from the cycle? See what happens. Okay, so as we saw, we moved into downward momentum here in 2009, and as you can see, the cycle was pretty damn good. And then we moved into upward momentum, and as you can see, the cycle's probably a punch up, bit of a correction, and punch up again. And as you can see, if you're an Elliott wave guru, this is all ABCs, you know. Wait a minute. There we go. Click, and the D button. So it's like an ABC wave. ABC. ABC. So these are ABC wave structures. So no wonder it's not working. Okay, let's have a look again. So we have downward pressure here and upward pressure, and that looks pretty good. The timings, you know, the consolidations and the price action are mirroring what's going on the chart. And here we were supposed to have a down move, a downward pressure. And we had a consolidation, but the downward pressure here became divergent because the upward pressure was too strong, and we're in an uptrend, so we had a breakout, and the upward pressure continued to here. And then once again we had downward pressure to there, whoops, to there, did that correctly? You can see the cycle is actually fitting pretty good. And we had a breakout, and in an uptrend, downward pressure from the sine wave cycle is not really well rewarded, okay? And in an uptrend, upward pressure is well rewarded, okay? Here we are. Once again, now what's coming up here? As we noticed, we're getting into, you know, the upward pressure starting to run out. Breakout, bit of a consolidation, yeah, very minor, but carries on. So what we're expecting is trouble to brew in this time frame, okay, which is 2018 to mid 2019. The sine wave is not a mirror of price action; it's a mirror of when possible change of behaviour or change in character going on. Okay. So what's spooky about this is that when I take the 900 and the 300 sine wave fixed cycle, these are fixed cycles, that means they're not adapted to price, and I load it into our detrending price oscillator, which is adaptive, and you can see that the price is moving very well, moving pretty good, a bit of divergence here, continues up, downward pressure goes well, a bit of divergence here, because it's an uptrend, and this is downward pressure, so it's not well rewarded. Up here we have an uptrend and upward pressure, it's well rewarded. And here we have downward pressure from the sine wave and the wave, and it is rewarded. That is interesting, because the last time we had a downward pressure it wasn't rewarded, but now we're starting to see downward pressure and the sine wave is rewarded. What's also very interesting on the adaptive cycle is that the bottoms and tops are telling true. So that basically means we are waiting for a price action to confirm a top up here. Now I'm using Wyckoff logic, whatever you're using, good luck to you, but I'm looking for supply and distribution to come in here and to show that the market's you know, getting ready to distribute. What is interesting too, I would say, is that we had distribution up here on this cycle, right? This was all distribution, and then the day was saved. The Fed jumped in there and did some magic stuff, and that was the election, so-called tax plan and all the rest of it, pumping it up. The truth is, this is pretty much just an algo run. I mean, you can't get that action from open outcry or from humans. This is just an algo run. Or maybe you might say this is people running, you know, they've got US dollar assets, they want to put them into a US dollar market because the US dollar is forecasted to fall on all the spending that the government's going to be doing. So once again, like anybody who's seen a chart in their life and studied the charts for more than 10 years, you're going to say this could be a blow off top. Well, that's the bias, because a big sharp move like this after a lengthy price run is considered a blow off top. This type of move where you see off a bottom is very, very bullish. because it's coming after a period of distributions. It's coming after a period of liquidation. Here we've had many periods of accumulation and profit taking. Now we're getting a pump up, a blow off top. What this basically tells me is, under my Richard Ney logic, is that the big boys just can't get enough public money in to sell to. They've got massive positions, and they need to get more public money to come in. And as you hear, I think the media is saying that there's a lot more money chasing these highs, and the public money is starting to come in. If you look at the NYSE margin, it popped up. So now they've smashed prices up. It's making all sorts of noise. Trump's even saying the beautiful stock market, the beautiful stock market. So it's getting all these people in, and people are going up to Trump and saying, look how 401ks and what the hell is doing really, really well. That is just getting all the dumb money rushing in for the big boys to unload to the mutual funds. The mutual funds is the dumb money, okay? Because they're taking money from Joe Public and what have you. And the other dumb money is obviously the ETF. So everybody rushes out and buys a passive investment. These are the big boys getting ready to sell to the public. That's the Richard Ney logic. I do not believe this is a move that's going to extend right up beyond 3,000 at this stage, unless there's massive distribution and then a change of character takes it up again like we had here. So at the moment, watch out for distribution, as the old heads who run these institutions can't believe their luck. Can't believe how much green they got on the screen. They've got it up high, and now they can start unloading hundreds and thousands of shares to the uninformed. That's what I believe is going to happen. So what the cycle says, along with the Wyckoff logic, is watch out for distribution in the next 18 months. And the pattern will lead us. Signs of strength and signs of weakness. The cycle work is very, very good in assisting Wyckoff logic, and also sits well with GAN. So here we can see a cycle that's been very well accepted over the last 9 years. And who to say after the last 3 times it's worked, the 4th time will not work. So I'm putting weight within the cycle, the kitchen cycle, and it's subordinate to the 300 period cycle, which is just a division of 3 of the kitchen cycle. So within readtheticker.com we have the ability to examine cycles in stocks, commodities, forex, and even Bitcoin. There's not enough data for that, but you can have a go. So thanks for watching. Give us a go. Cheers.